Welcome to the Tomosi Business Training Series. The basis of these sessions is to support the Tomosi Group staff and management to raise their capabilities and performance. This is also a platform to share our experience with young entrepreneurs making an effort to build their startups in Uganda and across Africa. In this session, we continue to explore the principles of basic accounting. Enjoy!
Welcome to episode 12 of the Tomosi Business Training Series. In today's session, we are going to look at two areas. We are going to cover what information can be provided by accounting and how this information can be utilized. There are two major types of information that can be provided by accounting. That is financial and managerial. What are financial accounting? Or what information can you find here, or what can it provide? One part of accounting focuses on presenting the financial information in the form of general purpose. That is financial statement, which includes the balance sheet, income statement, etc., which we already covered in episode 11, that are distributed to the people outside of the company. Most cases, financial statements or financial accounting information are given out or provided to people even outside the business or the company. These external reports must be prepared in accordance with generally accepted accounting principles, often referred to as GAAP. The second type is management accounting. This basically focuses on stakeholders within the business or the company, and it provides company's management with the information needed to keep the business financially healthy. Although some of the information comes from recorded transactions, many of the analyses and reports include estimated and projected amounts based on various assumptions. Generally, this information is not distributed to people outside of the company's management. A few examples of this information are budgets, standards for controlling operations, and estimating selling prices when quoting prices for new work. Other types of information that can also be provided by financial statement or accounting are advices on accounting system. In most cases, you find that if a company or a business realizes that there's a gap in the accounting system, they'll seek for expertise or they'll seek for advice outside the system for someone independent to come and look into its accounting system and give an independent opinion. This is still an information that is provided by accounting. You can also have income tax planning, advising, and reporting. Time and again, we've seen most businesses struggling with tax compliance or tax issues. We'll always like to invite someone outside the system to look into its tax issues, compliance, and advise accordingly and report to management. There's also element of auditing. Most of us are familiar. We may not know the nitty-gritty of auditing, but we know most companies do audit the financial statement of companies and other organizations. These are still type of information provided. There's general business advice as well. We'll see management or businesses. There are areas that you may not be very conversant with and you need an independent advice or opinion on how to go about it. Finally, you'll also come across financial planning for individuals. You can hire someone to do for you financial planning. This is still element of information that can be provided by accounting. We'll look at the second area, how the information can be utilized. The two major objectives for this information or providing information, accounting information, is to enhance planning or steer the planning process. The planning here involves developing objectives and preparing various budgets to achieve those objectives. On the operations side, we have come across work plans, strategic plans. And for this to happen, you need some bit of information from accounting department or from accounts information. There's the bit of control. Controls involves the steps taken by management to increase the likelihood that the objectives that have been set down while planning are attained or achieved, and that all parts of the organization or company are working together towards that. This bit of planning and controls is what we at Tomosi Group normally do during our retreat. What we are doing there, we are simply planning, but there's an element of control that comes along with that preparation. So how can we use this information? How can accounting information be used if we break it down? Accounting is the language of business, and accounting is used in just about every department, group, team, meeting within a company, production, administrative, marketing, sales, and every other department is answerable to accounting department. It's not a command, but like we looked at it last week in our series, we realized that any operational activities, in one way or the other, it has impact on accounting work or accounting department. For example, if you carry on a transaction as a manager or a head of department, a head of a company, in terms of sales, if you sign up a contract, definitely accounts department gets involved in terms of issuing invoices if sales have been, services or products have been supplied or offered. So much as accounts are not involved in your operations, but the result of what you do ends up in account as well. The objective of any business is to make money. Since the accounting and finance professionals are in charge of tracking and managing the money, they have the ultimate say in the business performance. In the preparation of financial statements, we'll still require accounting information. Accounts information can as well be used to evaluate the going concern of a business or a company. What a going concern is. This determines whether the business is going to continue trading or servicing its clients for an unforeseeable period, or is it going to survive for 1 or 2 years and collapse? This is simply or the basic of what a going concern is. Accounting information is used to determine the company's going concern position. The going concern is the company's position related to its ability to continue meaningfully operations into the future. If it is foreseen that a company cannot continue operations for longer than a couple of months, then the company has a going concern problem. This is determined by reviewing the financial statements. Ratio analysis is conducted to determine the company's financial position. So the experts or people who understand will always look into certain element of the financial statement and get to understand whether you're a going concern or not. Accounting information can also be used in ratio analysis. Ratio analysis is the evaluation of the company's liquidity, solvency, and level of debt. The company's liquidity determines its ability to pay its short-term debt. Its solvency determines its ability to pay its long-term debt. Other ratios determine if the company is turning over its inventory fast enough and if it is collecting receivables in a timely manner. All these issues are important in determining the success of its operation. Remember earlier on we talked about solvency or liquidity. How fast can you turn your assets into cash to enhance your working capital, to increase or expand your business? That is what they are calling liquidity. The solvency, like we have said, it's determining the ability to pay the long-term debts like the bank loans and so on. In the last week session, we said banks are interested in knowing how well the company can pay back its loan. We talked about profitability, said the bank may not care so much about the profit or loss you've made now. Doesn't mean that they are not concerned about it or interested or it's not important, but there are other alternatives that the bank can use to evaluate a company or a business, whether it can qualify for a loan or not. And this is what we are talking here, that the solvency or the ability to pay back its long-term debts. Accounting information can help the process of budgeting, which we have touched on earlier. At Thomasy Group, on a yearly basis, we do budgeting, annual budget. We go for a retreat and so on. We are looking at reviewing the budget process and so on. In that process, each and every company or heads of unit will require figures from financial information or figures from accounts department to head the process of budgeting. And budgeting is a critical function in all businesses. Operating a company without a budget is like steering a submarine without sonar or a depth finder. The accounting data provides critical figures in creating a future budget. Revenue, expenses, profit, and retained earnings are looked at when creating a budget. Budget looks at past revenues and year after year growth or decline. Budgets are built around these figures. Pro forma statements are created to help predict the results of future operations. For example, if Gideon's men would like to develop a budget, you'll have to look at the area of revenue, all its revenue, how it has performed last year or in the past years, and how the market presents itself. Because much as budgets are estimates, they shouldn't be very far from actual, what is out in the market there. Accounting information can also be used for cost accounting. Cost accounting is the process of evaluating operations through the use of variance analysis. Variance analysis here, we are looking at the changes between one period or between 2 months or a year. For example, if you say we are in the month of June and you want to compare June performance with May performance, you want to look at how well your revenue have performed between the two periods. Here we are looking at variance, or the variance can also arise between what you had budgeted and your actual. All these are done, all these processes are called variance analysis. You're trying to analyze how well you've performed from one period to the other, or how well you've performed against your target that you yourself have set. We have already talked about the importance of information to managers. Managers tend to use this a lot. They use cost accounting to support decision making, to cut a company's cost or improve profitability. Right now, the impact of COVID-19 has left so many managers to rethink of the cost, how to conduct business. Now, this process can only be supported by information provided by accounting or accounting information. This process is also used to streamline operations and decrease man-hours, raw materials consumption, service delivery time. Cost accounting has been used for several hundred years. This is actually used almost on a day-to-day basis. Here we know every month each manager is requesting for information from accounts because we want to see how best you've performed in the period or in a month that you've conducted business. That's why they call it managerial accounting, because it helps the managers a lot in the day-to-day decision making and evaluation of our business. Variance analysis, like I earlier talked about, calculates variances in either direction, over or under an established level of production, cost or labor hours. If a company has budgeted the use of 5 units of raw materials per finished unit and the manufacturing process uses 5, you had budgeted 5 and you've used 5, that means you've hit the target. Sometimes it's not bad to utilize your budget line or the revenue line, the cost line to 100%. However, you must be able to ensure that the consumption of this material have equally generated the return that you had targeted to achieve. I'll drive the point back home. I'll use Gideon's men as an example again. If we have set a revenue target that we are going to achieve 100 million in a month from the guarding services, and in a month you've hit that 100 million, but again you've spent more than 100 to achieve that, then you're not doing so well in terms of your cost management. And that's why this variance analysis and cost accounting comes into play. That each and every time, each and every manager or a business caretaker should be interested in what comes in and what goes out, and at what percentage.
Enjoyed this session? We would like to hear from you. Please give your feedback using the Google form attached or email us at info@tomosigroup.ug and visit our website on www.tomosigroup.ug or tune into the Tomosi Business Series on Facebook and YouTube to enjoy more of our weekly training podcasts. You can also visit our offices at Tomosi Business Park, Luzira, Port Bell Road, or call 0789 901 356.